apologize for my tardiness, but I was in dad mode this morning. Full blown dad mode this morning. I think it's a couple teenagers in Columbus, Georgia that's quite sick of me. That's quite sick of me. You feel me? Hey, good morning, good morning, good morning, everybody. This first time tuning in to Tim's Tidbit, I like to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty, well, thank you for always pulling up the Tim's Tidbit, hanging out with me and my homeboy Spidey back here. He's chilling by the window. Whoa, whoa, whoa. He liked the window over there. Spidey liked the window. But if you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day to talk about the price action. I do it for the free 99 because I want to help somebody like yourself get their aha moment. Shout out to cousin yesterday. I think it was Finding Superman, who asked me how long did it take me to become a consistently profitable trader? And over my time of being a trader, I learned that it's not about being consistently profitable. It's about not giving your money back. It's about not spiraling. It's about risk management, self-control, self-discipline. And that's the answer that I gave him, because it's not about becoming consistently profitable. It's about keeping the money you make. It's not about how much money you can make. It's about how much money you can keep at the end of the day. So, speaking of, I meant to go back and clip that up as a gem for people who have that same question, because it's a part of this trading thing that people don't tell you about. They tell you I can teach you how to be a trader. I can teach you how to make money. I can teach you how to turn $1,000 into $100,000. I can teach you how, but he never talk about teaching you how to control your emotions, teaching you how to overcome the hurdles of FOMO, teach you how to overcome the fear of being a failure. Nobody can actually teach you that, but that's a serious side of it that you got to be prepared for. Nobody prepares you for the hard part. They just prepare you for the fun stuff. I don't know why I started out in such a serious mood today. I don't know why. Shout out to everybody that's been tuning in to the different playlists with the meat and potatoes, the ICT content that I've been breaking down, the lingo playlist, the price action playlist. I have not started on the strategies playlist yet. I want to sit down and outline everything out before I start recording to keep myself focused. The gems from the live playlist. That's the meat and potatoes, where I chunk out different segments from the live videos and put it in here. If anybody want to download the slides or the spreadsheets that we have available for free, I'll put the link in the chat, but you can also do as I'm doing. Go to any one of the ICT. Let's back it up and talk you through it. Go to any one of the ICT playlists, either the lingo or the price action. Makes no never mind, right? Go to any one of the videos, right? And when you go to the description, it says download slides. That'll take you to a Google Drive folder, right? It'll take you to the link that I just put in the chat. Just put the link in the chat for that Google Drive folder. It'll take you to this Google Drive folder. Any of the slides, the PIM chart, the DR, IDR confirmation spreadsheet, IDR confirmation spreadsheet, the weekly goal calculator. Shout out to Homie Robinson for making it way more functional. If you want to download any of it, don't go to it and click download. Don't go to it and click on the little, whatever the little button is over here somewhere and it say download. Don't do that. It's going to tell you don't have permission. It's going to tell you to send me an email. please stop sending me emails. Please, 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 please. I even did a video in the gyms from the live. If you go to the gyms from the live content, I even did a video on how to do it. Gyms from the lives right here. How to download the ICT concept slides and week goal spreadsheet. That's supposed to say weekly. There's a video right there. 43 people even looked at it. And it's telling you how to do it. Please, 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 please. You come to the spreadsheet or the picture or the slides, go to file, make a copy, and then make copy. It'll save it into your Google Drive folder. That's how you download it. If you don't have Google Drive, then it'll let you pick it's a folder. It'll let you pick it. If you go, it'll say my computer, wherever, my computer, right? And then you just save it to your computer. That's how you download it. Do not go to download. What we got up there today? We got a chinchilla. We got anonymous chinchilla. Yesterday we had anonymous bear. We got anonymous chinchilla today. So that's how you download the I don't know what you call these materials. I don't know. And for anybody who don't know how to use the PIM- chart, I call it the PIM- chart because this is the order of operations which the algos hunt out the different PD arrays. If you want to be a seller, if you're bearish, if the bias is bearish, you wait for price to come above equilibrium into a premium market in the dealing range that you're watching. Wait for it to hit your PD array that you trade, and then you sell once it hits your PD array. If you want to be a buyer, right, you wait for the price to fall down into a discount market or below equilibrium and comes to your PD array that you trade. It hits your PD array, you buy, right? Standing on equilibrium, looking down, the previous lows are the farthest away from equilibrium in the dealing range, right? And algo hunts out the PD arrays in this order. Standing from equilibrium and looking up, the previous highs is the farthest PD away from equilibrium, and the algo hunts out the PD arrays in this order, heading toward those highs before they bust out the box. That's how you use the PIM- chart. ICD don't call it PIM-. I call it PIM- because of please excuse my dear Aunt Sally. Y'all remember that from math? Nobody's old as Robinson. Let's see who in the chat, man. Excuse me. Rhonda Green. Congratulations. You are first today. Good morning. Good morning. What's up, Levern? What's going on, Mendez? Y'all, excuse me for a second. I got to talk to my little niecey poos. Hello, Anna. Hello, Elsa. How are you today? Are you going to watch Coco Melon? Or are you going to watch something else? Really? I like that show too. Man, I'm going to watch the market. I don't get a chance to watch much TV. Really? What kind of snacks are you going to eat for lunch? I love that. Wow. Save me some. Good morning, Queen. How are you, Mendez family? How are you? What's up, FC? What's going on, Kareem? Here to learn and share. Good morning to you. The birds are still frozen. Tweet, tweet, tweet. They still cold. It's cold in Columbus, Georgia, man. There is a sparrow sickle sitting on the window ledge. What's up, Callio? Callio. Hey, Robinson. I went to the doctor yesterday. I feel like a freaking pincushion. I feel like I done got all the old man juice. I got a flu shot. I got a shingles shot. Then they said the shingles is a 2-part. So I got to go back between February and June to get the second part. I told them about how my knees was acting up and how my shoulder was acting up back in the summer. She gave me some kind of anti-inflammatory shot. They put it in my hip. When I tell you, I almost fought that lady in there. She came in there after my doctor left out. She came in there with that thing, and we almost fought. And then her hands was cold because they had to get a baseline EKG. You know what I'm saying? They had to get the baseline EKG. They scheduled me for the colonoscopy. They scheduled me to get rotted off the range. Oh, and then she said it was something else that I had to get, but she was like, I don't want to give you too many shots today, so we just gonna do this one the next time around. But you are good. You still only need to come once a year. But if anything happens between now and then, we do same day. We do same day appointments. So you just call, because you know the older you get, the more you got to come in. But you're healthy. You still in the I only want to see you once a week. But if anything happens, just call and you can come in. Then I got the paper and looked at the paper. It said class 1 obesity because of excess calorie intake. The folk told me I was obese. They said class 1 obesity because of, hey, what that? Hey, go bring me them papers from when I went to the doctor on my dresser. Go bring me that pamphlet from when I went to the doctor on the dresser, the one that said I was obese. Bring me that pamphlet real quick. Them people said I was obese. Hey. I heard somebody mumbling in the back. If this ain't what you tuned in for, what about to open it up? You about to open it up real quick. Hold on. Let me slide over here and get it for you. Slide over here and get it for you. Let me get the dough out. Oh, you got it? There it go right there. Yeah. I told y'all the dough was over there. I told y'all that's what the dough was. It said, okay. It says, I saw Kim. Tuesday, yes. Physical exam. The following issues were addressed. Flu vaccine needed. That was a pincushion moment. Abnormal wellness exam. Class 1 obesity due to excess calories without serious, I don't know what that word is, comorbidity, whatever, in adult. Unspecified BMI. They say my BMI is 31.1, right? Generalized anxiety disorder. I take my crazy medicine. Need for hepatitis C screening tests. Other secondary osteoarthritis of multiple sites. However you say arthritis, it's like I ain't know osteo was in front of arthritis until I saw this yesterday. Meaning colon cancer screening. Man, I'm on the old man list. And then they gave me the EKG, right? They gave me I said the flu. They gave me some called ketorolac. That's the one they put in my hip, the ketorolac. They said it was some kind of anti-inflammatory thing because I'm getting old and my ligaments and all that flaming up. That boy on the old man list. But the part that killed me was that class 1 obesity. Man, let's get back at what I was talking about, man. Robinson, stop distracting me, man. Stop distracting me. Lord have mercy. What's up, Pamela? Michelle Tucker. What's going on, Michelle? What's up, Captain Kirk? What's up, Morning? What's up, Sanjay? What's good, my guy? Hello, SJ. How you doing? As they say, good morning, Queen. Hey, it used to be so funny to me when my wife, her friends, like a bunch of females that I know, they used to always be like, if anybody greets you with Grand Rising Queen, red flag. What's up, Sonya? What's up, Cool it now. Ooh, watch out. What's going on, Kyle? FC, send your email. You better stop that. I don't even understand how I'm gonna see you walk. Maybe you can put a document at the top of the drive titled "How to download files for the new people." That would be a good idea, but they won't do that either. What's up, High C? Is the top-down analysis explanation a snippet? Is the top-down analysis explanation or snippet available, or will this be more detailed in phase 3? Phase 3. That's going to be the top-down analysis. That's going to be like a vital part of phase 3, because basically what I for anybody who wasn't on the live when I talked about it, what I decided to do with phase 3 is the overview. Excuse me, the overview video. Hold on, y'all. I just went running, and that them hungry burps coming back with a vengeance. But what I'm gonna do, the overview video is pretty much gonna be like a breakdown of how Lil Timmy Rogers would develop a strategy, right? And then we're gonna go through, and then the different videos is gonna be kind of plug and play with how to trade the different PD arrays using the strategy that we developed. And then going through it, we'll see if there's any nuances that you have to tweak because of how you trade the different PD arrays. You know what I'm saying? If it's a reference point or imbalance, or you know what I'm saying? It's like if we got to tweak it in any kind of way. So the PIM- chart gonna be all up and through them. Is it that cold there? It's about the bird. It was freezing. It's not really that cold today because it rained like all night. Since it rained all night, it was only like I think it was only like 40 degrees this morning when I got up. When I left out the house, it was only like 40 degrees, and right now it says it's 42. My phone says 42 degrees right now. Yeah, so it was, yeah, and it say the low. I don't know if you see it, say low was 40. It say low was 40. So I was like 40 degrees this morning, and it's 42 degrees. So it's not really that cold now. Yesterday, Charlie, whoo, I ain't gonna lie to you. Where was I at? I think that's everybody. Those stands are not based on Australia. You were hockey. And then Michelle said, obese. Oh my God. Imagine if you wasn't running. She told us, imagine if you weren't running. You would be around here looking like me. I say, baby, you look good. Girl, what you talking about? I like a woman with a little meat on her bones. Who know I got that from? Who know where I got that from? I like a woman with a little meat on her bones. Y'all tell me where I got that from. Taco Bell. That's what it is. Say, what's up, Max? You flatline. BMI is trash. I used to hate that when I was in the military. They want to come over there pinching. If you can pinch more than an inch, come over there pinching all on your side, taping you and all. Man, get out of here, man. Get out of here. That's Country Wayne with a K. Country with a K. What's up, Valdez? What's up? When you slid in the building? That sound dope. That sound thorough. They checked everything. They want everyone to look like toothpicks, stick bugs. You feel me? All you need to do is have a healthy diet and exercise every day. Can't be skinny. Yeah, because she was like, oh, you're healthy. Your heart looks great. Everything's amazing. Then I look at the paper, obese. What's up, Gabriel? I think the trash bag coming. Thanks, sorry. I've been busy past few sessions. What you apologizing for? You did nothing. Christmas in Tallahassee, the high is projected to be 32, so get ready. Man, it's going to be 32 in Tallahassee. What's up, T. Baker? What's going on? What's going on? Blue Street. What's Blue Street? What y'all talking about? Hey, man, Let's get to it, man. I don't waste a whole lot of time in the market fund to open up in 1 minute, man. The market fund to open up in 1 minute. I ain't talked about nothing. I just been sitting up here acting a fool. Let's go over here and holler at Spylean. Hold up, before we holler at Spylean, what we got today? Is it consumer confidence today? Was it consumer confidence today? Yes, consumer confidence Wednesday. Consumer confidence at 10, existing home sales, and petroleum status. So all of that's 10 and then 10:30 for the petroleum. So consumer confidence and existing home sales at 10. Hopefully the algos like what they see and we can finish this market maker buy model that we appear to be in. We did finish the smaller portion of it, and let's see if we can finish more. Let's see where we at right now. The market about to open up very shortly. The market is about to open up very shortly. Let's see where we at. Right now, the market is open. The market is open. The market is open. The market is open. Spylean just gapped up. And we didn't even sing the Spylean. I'm so sorry, Spylean. I'm so sorry. We did not sing you our ode to Spylean. We just got a, what did we open up at? We opened up at 383.25 and we closed yesterday at 380.54. So that's a $3.20. $3 and some change gap up. We got a $3 and some change gap up on Spylean. We gapped up well beyond yesterday's high. Yesterday when I was in here marking the chart for Spylean, I just left everything on when I mean marking the chart on the ES, I left everything on Monday. I left it on Monday's high and Monday's low because we had I just didn't feel like moving nothing, and we had in overnight we was already acting like we was gonna push past this high in the after hours, so I didn't bother marking that high on the spot. Let's go over here to the ES and look at the price action. Right, we're gonna do it on Trading View because Ninja Trader the candles ain't looking too good. See right here how we was flirting around that equilibrium, and we got that daily fair value gap up there. When I dropped lower, see, I marked it on here, and once I marked it on there, you see how we was already up. Well, y'all don't know where we was at, but we was right here at the monthly equilibrium. Remember when I was like, let's see if we make our way back to the monthly equilibrium on the ES yesterday, because the SPY we had closed at the equilibrium. Dow opens 300 points higher. Nike jumps on a strong earnings. That's what just came up on my watch. But yeah, the SPY had closed right at the monthly equilibrium right here. And I was like, hey, let's see if we make our way back toward the monthly equilibrium on the ES, right? Why did I close that? On the ES, and we did make our way back toward it. We got just above it, just a little bit. Let's drop down to, let's go all the way. Let's drop down to the hourly and look at the price on the hourly. I'm going to turn these, what's the names off right now until we get down to the 5 minute, the DR, IDR. Okay, so on the hourly time frame, as you see, this is the 20th, right here, close. This was the close. We had a slight gap up, right? We had a slight gap up at the open at the 1800 candle, 6 o'clock candle. We had a slight gap up. We pushed up to the monthly equilibrium that we was talking about, taking out yesterday's high, and then we flirted with yesterday's high all the way up until 7 o'clock. So it's like we flirted with yesterday's high all the way up 7 o'clock. We came down, took out the short-term sell side liquidity at London Open, and had a nice rejection off of it. Continued to push up, took out the short-term buy-side liquidity, came back down to just flirting around that equilibrium, dropped down again, took out short-term sell-side liquidity again, had a nice rejection off of it, and pushed up, took out the short-term buy-side liquidity again on the 8 o'clock candle. I mean, yeah, right at 8 o'clock. We took it out on the 8 o'clock counter between 8 and 9. And then now the market is open here now. Go down to 15 minutes, see if we can get some little more detail. Okay. Again, gap up, coming down. Rest on the top of the gap up. We open here, rest on the top of the gap up right there. That's the top of the gap up there. We rest on it. Got the pang out, got a reaction off of it. Left a 15-minute fair value gap and an order block here. Traded back down into the fair value gap, filled it completely. Right, traded into the fair value gap and the order block. Let's look at the PIM-dash chart. Do fair value gaps come before order blocks? Do fair value gaps come before order blocks? Yes, they do. Fair value gaps come before order blocks, right? So came down to the fair value gap, filled it, right? You got a fair value gap and an order block. So I'm gonna say we came to the fair value gap, push back up to this fair value gap, consolidated, push back down to this liquidity void and fair value gap. Nice reaction off of it. Still consolidating. Got a nice sell-off, went below sell side, short-term sell side liquidity, made some equal lows. We got relative equal lows all right here, right? Keep that in mind. Took out short-term sell side again. Like I said, got a liquidity void right there. Sold off pretty good. Came back up, broke down, sold off good. Back to the fair value gap, sold down into, filled in the liquidity void, and got an order block there too. Then got a nice reaction off of that, setting this order block here, and we got a nice liquidity void here, buy side imbalance. So we got a buy side imbalance and an order block right there at the monthly equilibrium. Now, looking at where we are in the grand scheme of things, I'm just going up to an hourly chart real quick. I just want to back up real quick. Looking at where we are, let me stretch these candles out so y'all can see it a little bit better, right? So looking at where we are here, right? This, remember we was down here when we were consolidating right here. I said we appear to be moving into a short-term buy model, right? So we moved up and we got here. That was the completion of that short buy model there, right? Now, as we move up where we are now, we are in a little bit bigger buy model. And so I'm assuming the target is going to be at least this high at this daily fair value gap. Is that a daily fair? Yes, this daily fair value gap, because price typically does not just stop in the middle of the buy model or the sell model like this and just reverse course. It typically gets to some point of like you got an hourly fair value gap right here, right? That we just came up and kissed. We came up and kissed that hourly fair value gap right there. We came up and kissed that hourly fair value gap right there and backed off of it, right? So now we've consolidated here, set an order block there, but price typically don't just stop in the middle of the buy model and then just reverse without going to a very significant place. You know what I'm saying? So that's why I'm saying it's got the target. I'm thinking the target for this buy model has to be at least here. And if we feel this daily fair value gap, might as well take out that and get back to this breaking market structure right here. Might as well take out that high. If we get to this high, then fill this fair value gap. True, we got a potential rejection block right here, right? But might as well take out that high if you get that close. That's why I say where we are right now and price, it seems like we've got into like the Christmas low. It's like, hey, Santa Claus rally who? It's like it's like watching pond water right now. I don't know if the market just gonna hang out around here around equilibrium. Like what was our scenarios? Our bearish and bullish scenarios 1 and 2. The bearish scenario, one, let me go to daily candles. All right, bearish scenario 2. Well, we said sell off, right? Sell off Monday, turn around Tuesday, slide to the right. With the news, wait on the GDP and PCE. Algos don't like what they hear from GDP and PCE and sell us off. And then the bullish scenario. So the bearish scenario 2 and the bullish scenario 2 still in play. The bullish scenario was sell off on Monday, turn around Tuesday, slide to the right in front of GDP and PCE. Algos like what they say and push us up. And so right now, we already had the sell off Monday. We had the turnaround Tuesday. And now today, we've pushed up a little bit, kissed out the fair value gap, and we still hanging around this equilibrium here. So let's see if we, fight our way up to the fair value gap, or will we just hang out and chill until tomorrow? GDP tomorrow, right? Just see if we'll just hang out and chill until tomorrow. Let's see what we get, Bob. Now let's drop down and look at the DR and IDR before I go look at the chat. Let's drop down to 5-minute candles. Yeah. Let me turn it back on. Turn it back on. Oh man, I keep forgetting this got a delay. So we got let me hide the other stuff so I don't get confused. Hide my TDA. What's this rectangle? Put this inside there. Okay. So let me see what it looked like over here. We drop back down, we coming back down here to this fair value gap. We came up, we kissed that thing, and we dumped. We dumped all the way back to equilibrium. All the way back to equilibrium. We got a 5-minute fair value gap right down here. See what the 15-minute look like real quick. Just came into a 15-minute fair value gap. Got another 15-minute fair value gap right there. Right here next to this humongous order block. Got this huge order block right here on the 15-minute. Fair value gap inside there. Wicked off pretty good off of that. What's the name? Now let's go back and look at the God dog it, Tim. Why did you do that? Let's go back and look at that DR IDR from the London. Okay, so from the London, man, we got a nice confirmation long on the London with a nice pickup right there. That was a nice DR IDR long right there. So we had the on the London. I wonder, Robinson, did you take this trade? Robinson? Nice long. So looking at the DR IDR on the London at the London Open, we came down, set the DR low on the 310 candle. Had a nice reaction off of it. Got a DR confirmation on the 4 o'clock candle, right? That would be the 405 candle. If you're looking at Ninja Trader, got a nice confirmation to the upside, real strong confirmation to the upside. Then we came back down, Didn't come down to anything here. You came here to a fair value gap. That's in the premium of the IDR range. So if you entered off that fair value gap, depending on your risk management, where you placed it, this may or may not have gotten you. If you risk it down to here, then you were good. If you got a certain amount of risk, this may or may not have stopped you out, right? Then we pushed up back into this fair value gap because you had a breaking market structure to the downside with a fair value gap, pushed up into it here, sold off, right? Once you sold off, boom, you got the long entry. Here came just short of that, pulling back again. Oh, that's the pullback. I keep forgetting it's behind. So we got the long entry and it took off there. So looking at this, it came to the equilibrium. This that's the only fair value gap there. It's a clean move, but I'm not seeing anything outside of this fair value gap that would have gotten me picked up on this right here. But it is a clean move to the upside. So like I say, if you trust the IDR to risk it to the bottom of it or to the bottom of the IDR range, this right here would have been a clean move. So looking at going between, let's check out between the time frames. So going between the time frames, let's test this out real quick. This is the fair value gap right there that we just marked out. You got this fair value gap right there. So based off going between the time frames, let's see if we're in the mind frame of this time frame supporting that one, right? Meaning this showing long, right? The Asian showed long. It had a confirmation to the upside. The London had a confirmation to the upside. So let's just say, okay, we believe this is going to support that. So let's see if about an entry off of, you got two fair value gaps. I don't go with the top one. So we're going to talk about the entry off of the bottom fair value gap. Entry off the bottom fair value gap. I want to do it, and then before I go back and look and be like, so we're going to go, it's a small gap. It's a really small gap. So it's from 66.75 to 60. Yeah, it's real small. It's teeny tiny. It's not even a big gap. I just go to the top of the gap. I go to the top of the gap because it's so little. I usually would split the gap, but I just go to the top of the gap since it's so teeny tiny. And then we're going to give it to below that low right there. What's that? 62.50. 1, 2, 3, 4. All right. 62.50. And we're going to give it back to, do we want the low hang? Do we want this high or the low hanging fruit? The low hanging fruit is 2.3 to 1. Okay, that ain't bad. We're going to go to the low hanging fruit, 2.3 to 1. All right, now let's flip back over here to the one that's in real time. So let's flip back over here to the one that's in real time. All right. That fair value gap. Oh, let me go to 5 minute. We're on 5 minute charts. Not picked up at all. So that's, all these gaps look totally different. Let's see. Did something just move? No, it didn't. So 38.66.75. 38.66.75. Not picked up at all. 38.66. Oh, that's way down here. That's way down here. Not picked up at all. Not picked up at all. Nice idea. So, and then if I get missed like this, if it don't come where I want it to come and it take off like that right there, I just go ahead and kill the order. I just cancel it off. Get out of there. If once it react like that and run away from it, I cancel it off because it made the move for this area, and I just have to wait and see what price action do later. Well, let me see what y'all talk about in the chat. I paper traded that trade at London. That's what's up, Mendez. No, I was asleep. I did watch ADR Asian for a couple hours, and it never confirmed. I wasn't paying attention until 8 a.m. this morning, so I missed the London move. Oh, yeah, it was a nice little move. It was, a matter of fact, it was almost close. It was looked like it was about to be a retirement trade, but it stopped. I think it stopped. Did it stop before the? Well, actually, if I ain't mistaken, I think the master says he said something about the retirement trade. I don't know if it's like a certain area down here or if it was below equilibrium. I got to go back and like this over here. I know he considered this a retirement trade right here because it's a little bit low in the range. But like I got to go back and see how far down in the range when he considered the retirement trade. You know what I'm saying? Taking it and then catching it back up. I got to go back and see. Yeah, that's congratulations, Mendez. Wake me up next time. Don't wake him up at all. Don't wake him up at all. Just take the trade and come in here and go drop it in the Discord and be like, quick 30 points. I left the rest on the table because I had to go back to my 9 to 5. Don't give him nothing. Don't give him nada. Don't give him nada. This right here, we came down to, we hit that order block and bounced. So right up on the equilibrium. Either way it go, even if I was looking at Ninja Trader, I still wouldn't have got picked up on that trade. And the reason why I wouldn't have got picked up on that trade, because since we got this order block right here, I would have been, instead of looking at this fair value gap down here, because on what's the name, I guess I had it stretched out and it was making the fair value gap look more exaggerated, or maybe it just looked different on the ES. But we got an order block, we got a 15-minute order block here, we got a 5-minute fair value gap there. So I would have been waiting like somewhere around London open right here. Like I'd have split this fair value gap, and that would have put me almost at equilibrium of this order block. I mean, mean threshold, I'm sorry, of this order block. And then splitting the difference, the mean threshold of this fair value gap, that would have been my entry point, like right around here. So I still wouldn't have got picked up on this trade because it stopped on the top of the fair value gap. It hit this, top of the order block. It hit this fair value gap right here, got a reaction off of it, pulled back down one more time, and then took off, bouncing off of the order block on the higher time frame. So I still wouldn't have got picked up, even if I was watching it in Ninja Trader. Even if speaking of watching it in Ninja Trader, let me turn my what's the name on. That's pretty much all I got, man. Y'all welcome to sit here and watch me watch the candles. Y'all welcome to sit here and watch me watch the candles. We still don't have a. Oh, let me set my New York open. 9:35. $76.75. Yeah, that's what it is. Okay, so we pushed up, came down. made a higher high, came down, broke structure, came down, hit this order block, pushed up past that fair value gap, ignored that fair value gap. So that's a pretty bullish move on the 5 minute anyway. Let's see what it looked like on high time frame. The Dow on gas. I did not check this out. The Dow is on gas. These are hourly candles. So from 8 o'clock last night up until now, the Dow is on gas. The NQ is pretty much consolidating. It did make a higher high though. And then the ES is the red. It's the red-headed stepchild in the middle. Just came back down to an hourly order block, which is roughly in the same spot as this 15-minute. Let's see. Yes, this is the hourly. Okay, so it makes sense now why it stopped right there, because it came down to an hourly order block right there at equilibrium and down and touched the top of a 15-minute order block there, then pushed off. So it makes sense why it stopped there now. See, this is why I like to mark my stuff from the higher time frame down. Like, you see how I marked this from a lower time frame, and I didn't even look at the higher time frame to see what was going on because I was already, you know what I'm saying, deep down into the price action. This is why I like to mark my stuff from the higher time frame down. Like this hourly fair value gap that I marked last night, and we got smooth equal highs at that right there. It's smooth equal highs there. And that's the hourly fair value gap that we was talking about when I was like, if we come up and close this fair value gap, heading toward this once, and we got a breaker. We got a hourly breaker up there at the top too. Expect some reaction off of that. That may be the catalyst to hit that and then pull us back down to equilibrium to sit there and chill out and wait on GDP tomorrow. What time we get consumer sentiment? 10:30, was it? 10 o'clock. 10 o'clock. Okay, so we get consumer sentiment in 4 minutes. Three minutes. We get consumer sentiment in 3 minutes. Man, there's so much junk on this chart right now. I can't see nothing. I got to turn this what's name off until it get made. I can't do this right now. This is bothering me. I got too much going on. This was yesterday's high. Let me take that off. That was yesterday's high. That was acting as support. Okay, which said retirement is between 0.5 and IDR. This one was at the 0.5, which is another setup. Okay, so the retirement is lower in the what's the name? So the retirement is like down here. Retirement is between 0.5 and IDR. Okay, so right here. So retirement, it'd be in this area down here. So, but wait, so when this dip here, when it come here, that wouldn't be considered retirement, or do it need to go deeper, like how this one came deeper down? So once it come below the 50%, that wouldn't be considered retirement, or do it need to get further down in the range to be considered retirement? Asking for a friend. Asking for a friend. Hey, get off my screen. see something real quick. Struggling. Got a funky spread on that one. Yeah, it's a deeper retracement for the retirement. This one never closed, but okay, it's got to close below. Okay, and then come back up. Okay, so the closure below. News time. I missed what the reaction was. What did them candles do? I was over there looking at my phone. What did them candles do when the news came out? Okay, we got to spike up. We spiked up when the news came out and hit this fair value gap right there. So the algos use the news to come back to this fair value gap right there. Let's see if the positivity continues or if we just use that to get there to sell back down. Okay, we got to spike up to the fair value gap. Spiked up to the fair value gap. Let's see if the positivity holds up and continue to push up. Gotta swing. Gotta swing high here. We still got this 15-minute fair value gap that's down now. Just made a swing high right here. I mean swing low right there. I'm sorry. So we came up, breaking structure, pulled back down to the fair value gap. Back to midnight. Pushed up, breaking market structure. Got a liquidity for it. Fair value right there. Came down, news came out, pushed up. Now it's pushing up. On a 15-minute revisiting this right here, we should be able to push through that relatively easy because if we traded both ways there and price is pushing through it, push through it pretty easy, stopping right there. Let's see how this play out. And that's just the first 2.5 minutes of this 15-minute counter right here. Okay, it pushed through it pretty easy because we traded both ways there. So that was, pretty much rebalanced. Well, pretty much balanced area. Down. Sideways right now. ES trying to break out of the consolidation. The NQ waking up. Look like the ES leading right now. The ES is leading right now. All right, we repriced the hourly fair value gap to the top side. That marked out. We got another fair value gap right above it. We got a nice little sell side imbalance, nice little liquidity void there. So we repriced that one. There's another fair value gap right above it, and then on top of that fair value gap, we got the hourly breaker. So it's a 15-minute fair value gap on top of this hourly fair value gap. So I just marked out the hourly. I didn't mark out the 15-minute. Yeah. So that's an hourly. There's a 15-minute fair value gap there. And then you got an hourly breaker right there. No. Why did I mark that as a breaker? Why did I mark that as a breaker? That's not a breaker yet. That won't be a breaker until we got up here. That's just an order block right now. Why did I mark that as a breaker? I must have been sleepy when I marked that out. I had to be sleepy when I marked that out. I had to be sleepy when I marked it out. All right. Got an order block right there. Why did I mark that as a breaker? I do not know. That won't be a breaker until we trade it through that. If we trade it through that, then it'll be a breaker. It'll be a bullish breaker. IDK. I don't know what I was thinking. But the ES seems to be leading for this hour. The Dow been on gas all night, but the ES was like kind of leading for this hour. On this hour, it was pulling the strongest because the Dow didn't break outside the consolidation. The ES did break out of this little 2 to 3 hour consolidation. It broke to a new high on the day. The NQ actually pushed up last hour and broke to a new high on last hour, and then now the ES just broke to a new high at this hour. It's kind of like going back and forth between who gonna be the strength leader today. It's kind of a mixed bag. Hey, here to learn the show. Does NQ have SMT at the highs? Talk about for the hourly. That's what I was just talking about. It's like a mixed bag of tricks. It's like the Dow made a high on the 9 o'clock candle. The NQ made a new high on the 10 o'clock candle. Then the ES just made a new high on the 11 o'clock candle, on the candle we on now. So it's like a mixed bag of tricks. So see, from there to there, from there to there, to there. Okay, from here. All right, from yesterday. No, so from yesterday, low. Yeah. Now the Dow just running, but like right now, I ain't seeing no S&P divergence right now. The Dow just leading because the Dow broke to new highs from that's the 19th. When was the 19th? Monday. So it broke above Monday's. Yes, it broke above Monday's high. The NQ still have it, and the ES getting close to Monday's high. The NQ lagging. Man, look at the difference in this right here. Consumer confidence at 108.8 on the forecast of 101. Not sure who they asking, but it surely was. hey, look here, man. You got to get your shirt, Robinson. You got to put your shirt on, man. You ain't a bull or man, you a beast. It don't matter if you was in these 32 people that they ask. Let's see how many people they ask. On these, man, these things be, I don't know who they be asking. Refresh this. Let's see who these let's see how many people, because they be asking like 12 people. The board surveys on this labor market, man. The survey is conducted by Taluna, an online community platform. Conference board. They usually tell you how many. Oh, here it is down here. God dog it. Okay. A reading below 0. Nope, that ain't it. Nope, that ain't what I thought it was. That ain't what I thought it was. Okay, Survey of about 3,000 households, which asks respondents to rate the relative levels of current and future economic conditions, including labor availability, business conditions, and overall economic situation. So it's 3,000 households. They asked 3,000. At least they asked 3,000. I'd have seen some of them that ask 100 businesses, 100 people, 1,000 businesses, 1,000 people. At least they stretched it out to 3,000. Okay, you already on it. 3,000 for this one. Reminds me of the Nielsen. Hey, I ain't gonna hold you. I actually got some Nielsen stuff to fill out. It might have been twice, because they do it like so many. Is it like every 10 years they do it? Is it every 10 years they do? But you know what I'm saying? When I was younger, of course, I never saw that stuff. You know what I'm saying? And most time we always live with our grandma, so it probably didn't come to my parents, so I never saw it because we were staying with my grandma all the time. But once I became an adult, I remember filling it out 2 times. So you were the one. Oh, they asked the kids. They asked 7 kids who wanted more. That what they did. They asked 7 kids who wanted more for Christmas. Who want a? That thing on gas right now. We might go take out that high. From cause what's name already took out that high. The Dow, the Dow. That's what I was about to do. The Dow already took out that high. Wednesday. Monday. This is Monday's high. This is the highest point on Monday for the Dow. The Dow took that out. And then it's the highest point for Monday on the NQ. Then it's the highest point for the ES on Monday. So yeah, the ES gunning for it. Getting a slight reaction off of that order block. Slight reaction off the outlet order block. Got a potential rejection block right here. Got a potential rejection block here. We came up to an area of support and then backed off, making this right here an order block, making this. So you got this huge order block right here that we came up to and sold off. And then now we got this smaller order block that came up to this order block when we sold off there. Now, this order block is the top of the market maker buy model that I was just talking about. When I was like, price usually don't stop in the middle and just reverse like that. We have this right here, this daily volume imbalance that we went there and consolidated in right there. I'm gonna leave it on the chart. Because I want to see if it's going to act as support if we come back down to it. So I'm gonna leave it on the chart so I can remember that it was there. I want to see if it's going to act as support. It was a daily volume imbalance. This is where the chart was acting crazy on that Sunday. So it's missing a lot of candles. It go from like Friday at 7 o'clock to Sunday at 11 o'clock. So it's a lot of candles missing in there for me. 3,900 in play. Yeah. That's the that complete the market maker buy model. I got the Nielsen survey request a couple months ago. I kept the 20. How you dirty? They need that information. Michelle. They're not gonna use that. They ain't gonna use that information to manipulate the polling sites. They need that information for good reasons. Fill it out. Take the 20 and fill it out. They need it to help the schools. You know what I'm saying? They need to know how, like, where to shift the money for the schools and stuff. They're not going to manipulate the polling demographics with the Nielsen information. That's probably who be calling tell that is you don't trust them. Yeah, Michelle said, I don't trust them. I don't trust them. Yeah, but 3900 gonna complete the market maker buy model. That's what that's another reason why I was like, I didn't say that today, but when I saw where the high was, this high right here was at 38.99. I said, oh, that's 3900. We're gonna take that. That's a round number. You know what I'm saying? It's a big round number. That shingle shot is killing me. It's killing me. But when they gave me that shot, that thing started burning. Nielsen, not the consensus. I did the. Oh, you did the consensus. Yeah, yeah. Oh, is it the consensus that they do every 10 years or every so many years, or is it the Nielsen? Which one is it? Which one they do every so many years? Says Tim, who doesn't want anyone delivering it. Ain't got no more warrants. I'm good. I'm Gucci. Yeah, man. I ain't got no more warrants. Jesus worked all that out. Jesus worked all that out. Let's go look. Is it 10? No, it's not 10:30 yet. It's not 10:30 yet. I was gonna say let's go look at. Let me switch this over to SPY because SPY got real time clicks. Okay, so it's not 10:30 yet. So we done got into this daily fair value gap on the SPY. We took out. So for the SPY, we've taken out Monday's high on the SPY. Right, Monday's high for the SPY has been taken out. Monday's high for the ES still has not been taken out yet because they trade on different time frames. But if you look at let me see, what is this right here? 9 o'clock right here. This was, let's go down to 15-minute candles. All right, so Monday 19, 10:45, 8:30, 9:30. Okay, so 9:45. So that was Monday's. The bottom of this hourly fair value gap was Monday's high, Monday's New York high. So you know what I'm saying? That's Monday's New York high. So the SPY, this is the SPY's high. The bottom of this hourly fair value gap is the SPY's high. So we already went through the SPY's high, and then the high for Monday on the ES was made during the London around 5:30 or so. So we still have not reached the high on the ES yet. All right, we this candle right here moved pretty far. We would need to. I would like to see us come back and get some of this to keep the bullish momentum healthy. I would like to see us come back down and get some of this liquidity void that we just made, because I know that's that candle that big. You already know that's a liquidity void. And if we drop down lower, we got 2 5-minute candles straight away. 2 5. God dog it. Yep, blast off. We got one fair value. Oh no, it's a fair value gap down here. We got a fair value gap there. Got a 2 candle order block. Breaking market structure here. The fair value gap is in a discount. Came down to this 5-minute fair value gap right there. So let's look at this 60-minute real quick. Look at this. Okay, so we got 41 minutes left on this hourly candle. We just pushed above that. So we still can come down and get the wax off on this right here. We still come down and get the wax off. We got the wax on that hourly candle. Yes, every 10 years on the census. Okay. My sim, Apple, and SPY calls doing numbers right now. That FOMO killing me now. Don't let the FOMO kill you. Don't let the FOMO kill you. Just, you know what I'm saying? Take comfort in the fact that you saw, anticipated the move, executed, and it played out. Even if you anticipated the move and executed and it didn't play out, it's learning experience on both ways. It's a learning experience on both ways. You know what I'm saying? Take comfort in the fact that you anticipated the move, saw the move, and executed on it, and journal it. And when it come time to go live, do the exact same thing you did on that sim trade. And if it go in your favor, journal it, and you know, have your risk management in place, have your take profits in place. Where's your profit target? What's your profit? Do you got a certain level you're going to? You got a certain percentage? What's your what's your trading plan for that? You got a certain percentage you're going for. You got a certain number you getting out at that. If when it break the high at 3,900, are you getting out at 35%, 50%, 100%? What's your profit target? And if it's a percentage, what PDub rate is that percentage tied to? Right? Don't just get in and be like, oh, I'm gonna go for 100%. Right? Look and see if that 100% makes sense with a certain PDub rate. Like if you can't look at the chart for the premiums on your platform, then it's just going to be like a rough guesstimate. You know what I'm saying? Where you look at where price moved to and guesstimate, okay, this swing high right here should be 50%. This swing high right here should be, 65%. This swing high up here should be 100%. It's like you have to do a guesstimate, but have like a target for, oh, we got a fair value gap here. So once we get to that fair value gap, I'm gonna lock in profit for whatever the profit was when we hit this swing high right here. Like have a plan. Have a plan for the exit, even on the sim trades, especially for options. All right, we got above the mean threshold of this 60-minute order block. So we got above the mean threshold. So not saying that it won't hold, but usually when we push through past 50%, we usually get like a little retracement and then blast on through it. Typically. Let's go see where they pumping money. I ain't looked at this one in a long time. I ain't looked at FinViz in a minute. Bubbles. Right. So, Nike, man, Nike up 14%. Nike is up 14%. Carnival Cruise Line up 8%. Okay. Google flat. Google is flat. Amazon up 1%. Apple up 1%. Microsoft up 0.25%. Nvidia up almost 2%. United Healthcare flat. That's a big Dow stock right there. That's flat. Eli Lilly up. Oh, that's Estee Lauder. Walmart. So we got a few things that's down. But for the most part, everything either flat or slightly up. We got some outliers that's really, really high. But for out of the big boys, Google pretty much flat. But the rest of the big boys, Meta up, Amazon up, Tesla up, Home Depot is flat. Apple. That's them Jordans. Nike starting to sell it. It need to sell off. That thing was up 14%. It need to sell off. Cool off or something. Somebody gonna take them a little bit of profit. They ain't gonna just be out there letting it hang out. They ain't gonna just be hang out with the wang out. They ain't gonna just hang out with the wang out all day. Okay, we ain't got a whole lot of red. We got a few bright greens. The brighter the green, the higher they are. Like Nike, how Nike bright green, GE bright green. The brighter the green, the higher the percentage is. The grayish ones, those ones that's pretty much flat. You know what I'm saying? The brighter the red, the more down they are. Just like this FTNT is down 4%. What's that, CVS? What's this right here? Is that CVS? I can't see. What is that? Yeah, CVS. CVS down almost 2%. Then Amazon got this dark green because they up 1.3%, but the brighter the green, like that's 1.8. That's 2.2. How is, I guess it got to get past 1.5 to get bright green. Is it 1. Because this is 1.39 and it's a dark green. This 1.34 is a dark green, and then this 1.61 and it's a brighter green. I guess again, Apple 1.57, it's a different color green. So I guess once it go past 1.5, the green get another step. It get another step. See what NASDAQ looking like. Apple, Nvidia. All right. No group. Look at the big one. Okay, so Apple. That's good. That's flat. That's up. That's up. Yes, earning gap up on Nike. Huge gap up on Nike. There we go. We're still pushing. Okay. This right here might, once we take out this buy model, this might be that they might want to try to act crazy and come back down to that equilibrium on us. All right. Because that's going to bring, yeah, NQ coming up. I wonder if they're gonna let the NQ, if they're gonna take the NQ up and take out those highs too. Because the NQ coming up on the fair value gap. NQ, nobody had a fair value gap there, but the NQ, well, the ES had a small one, but the NQ got a nice fair value gap right here. And the ES is a stone's throw away from taking out that high. But we got a nice fair value gap on the NQ right there. And then the Dow didn't have to contest with that. The Dow still on gas. Look at that. Golly. The Dow on gas. The Dow coming for 16th. Who's the 16th? Man, the Dow on gas. Man, last Friday. The Dow coming for last Friday. Okay. Yeah, the Dow coming for last Friday. Acting like it. Acting like you're acting. Acting like you're acting. Now, if we're gonna push this strong, I know we got GDP tomorrow, so I'm feeling like it's gonna. I got a sneaky feeling that we're gonna come up here, maybe hit this rejection block right there, and try to come back down here to this equilibrium. Cause we look at that, we set an order block right there at this equilibrium. I got a real sneaky feeling that that's what these algos gonna do. Gonna come up here and complete this market maker buy model, and come back down here and chill out by this equilibrium and wait on this GDP numbers tomorrow. Because we came up to equilibrium right when the consumer sentiment numbers came out, took off. I got a sneaky feeling we're going to complete this buy model, hit this rejection block, and come back down to equilibrium and wait on these GDP. They better not do that. You stinker dog. You better not do it. You stinker dog. You. We got a lot of upside work to take care of, man. Look at all this upside work we got to take care of. We got a daily fair value gap right here that I marked out. Right, got this daily fair value gap right there that I marked out. This right here is a daily breaker. Let me go make sure I marked that right, because I showed marked that order block wrong. I don't know why I had that marked as a breaker. Right. All right. This low right here broke that high, traded through. Yes. So this right here, I marked this candle as the breaker. This was the last down close candle. Right. We came to the low, went up. It matched, this candle matched up with the low candle. Right. This big beefy candle matched up with the lowest low down close candle on this low. So I just marked out that as the breaker. That's how I chose it. What was that? Okay, so we got a daily fair value gap right here. We got a volume imbalance right there too. We got a daily volume imbalance right there. I have marked that one out. We got a daily volume imbalance right there too. Matter of fact, see, do I want to replace that? See if I want to replace that off. We on gas right now. It's a daily count and it's moving. We on gas right now. Yes, sir. 3,900 taken. Hey, it looked like a lot of people waiting on that 3,900. You see how we took off when we hit that 3,900? You see how we took off when we hit that 3,900? That right there, that let you know that people had buy stops sitting there waiting to get punched in long when we hit that 3,900. Right? People had buy stops right there waiting to get long. And it was, you know what I'm saying, probably buy stops to take people out of shorts. Anybody that went short here and they were still in, they probably had they buy stops there to get them out of shorts. And then it probably people sitting there waiting on that 3,900 want to go long. Because I know a lot of people, they be like, okay, I'm going long, got to break a 3,900. They play the breakout. right? I've never been the person that played the breakout even before I learned ICT concepts, but I know people that trade like that. They be like, hey, if we break 3,900, I'm going long. They play the breakout. Okay. We easing up on this rejection block. Let's see what happens. This is a nice hourly candle right here. Very, very bullish. Nice candle right here. Let's check the IDR. It's 10. Oh, we still got a minute. A little less than a minute. Got less than a minute. Look at that blast off right there. Did we just close? Yes, we just closed. So we got a confirmation to the upside on the DR. All right, we got a confirmation to the upside on the DR. No confirmation on the IDR. We got an order block right here. We got a fair value gap right there. Okay, so my DR, IDR, what I'm watching for today would be entering there on the fair value gap there, giving it to the this low right here. Let's see what that is on the let's see if the ES caught up. Let's look at it on the what's name. Waiting for the retest. Yes. Raps say waiting on the retest. Yes. Smart man. Smart man. Okay. All right. So this low right here. 38.77. 38.87. 38.86. 38.94. Okay, so yeah, I'm well within. So 38.6 will be there, right there, and then 38. That's just above there. Okay, so boom, it can go off the top of the gap. You need to put the stop below here, below that order block. All right, so yes, long trade. What I said, 38. I said 38.94. 38.94. This thing way behind. Did I say 38.94? Man, this thing way behind. What did I say? 38.93.75. Yep, 38.93.75. Man, this thing way behind. All right now, so 38.93.75. Is it clicking? Stop clicking. 38.93.75. Giving it to 38.96. Let me see. 96.75. 38.86.75. 7, 8, 9. 8, 93.75 minus 8. 38, 85, 75. 38, 85, 75 right there. No, I just put it to 1 point below. So 06. My normal 1 point below. So yeah. And then let me see what I got to shoot for. What do I have to shoot for? Is it anything to shoot for up here? I guess I go to the rejection block right there. Go to the rejection block right there. What is that? 1.5. Okay. 1.5 risk to reward. Let me see. You can go look at that again. That ain't no really nothing to write home to mama about. Ain't really nothing to write home to mama about. If I change it to go to the low of the Dow surges 500 points, led by Nike on hope. On hope earnings will be better than feared. That's what just popped up on my watch. If I go to the order block below the low from the counter that made it right there, let's see if we can get a better risk to reward out of that. Because that ain't really nothing to write home to mama about. But 1.5, what I said it was, 1.5, I ain't mad at that. That'll work. 1.5 to 1. You gotta remember that thing way behind too. Still on gas. Still on gas. Thing running so far, I can't see nothing. Crazy. It's already at the rejection block over here. It's already at the rejection block over here. So I ain't even gonna be able to really mark it out until if it decide to start giving a retracement. Because we already at the rejection block in real time. When I come back over here to the one that's not in real time, we haven't even gotten that far yet. Right here. See, we haven't even gotten up there yet. So I won't even be able to make a real assessment until we start the retrace. I'll just leave it there until we start the retrace, and I can figure it out later how I want it to go. Apple up almost 2%. Video. Just waiting for the retest. Apple gas monster right now. Look at that hourly count on Apple. They start moving that money into Apple. Hey, who that was? Sanjay, you never answered me on what was your I just was talking to you. VIX fell to 20, so we moving. What was your exit for this right here? What was your exit plan for that? Was it a certain percentage? Was it a dollar amount? Did you say, hey, if we hit what's this high right here? If we hit 137.65, I'm out. Or you know what I'm saying? If we hit whatever this high is right here, the one we just blew past, what was your exit for that? Was it a certain percentage on the options, or was it like a certain dollar point you got to on Apple, then you was getting out? What was your exit plan on that sim trade for Apple? And what was your exit plan on the sim trade for the SPY? Because you said FOMO was killing you. What was your exit plan? Focus on the good part. Don't focus on this could have been real money. Because it's always going to be time when it could have been real money and it should have been play money, because you got your head bust to the white meat. Trust me, it's going to be plenty of them days. All right. Came back down. Kiss this breaking market structure again. Slight reaction off of it. Last time we hit that, we sold off. Hit that breaking market structure right there into this fair value gap. Sold off. We're back at it again, coming up to it. Just touched that breaking market structure again. Let's see how we fare this time. Because right now we on gas. All three indices on gas. Time is 10. Do we have something coming out at 10:45 or 10:30? What do we have coming out at 10:30? Petroleum. Is crude oil inventories at 10:30. Negative 5.9. That means the inventory went down. Actual less than forecast is good for currencies released 4 weeks, while this is a U.S. indicator, it most affects the loonie. I don't know what the loonie is due to Canadian. I guess that's a Forex thing. It's primarily gauge supply and demand. It's the primary gauge of supply and demand imbalance in the market, which can lead to change in production levels and price volatility. Right, so it dropped 5.9 million and it's green. So I'm assuming that's good because it's green. Over here, it said forecast 4.2 and it came in at 4.09 and it's red. Over here, say 1.1, it came in at 108, it's green. Over here, it said dropped by 222, it dropped by 217, is green. I'm assuming green mean it was good. I don't know. I don't watch crude oil like that, so I can't tell you. I ain't gonna play like I know. Apple gassing. Oh, my bad. So I've been just keeping it simple, looking for 30% gains, and then assess if I should get out. Okay. My all right. If you want to do it at a point where you want to assess if you want to get out, start out with just shooting for a target. 30%, I'm gone. Right. And then once you start to notice, hey, I'm hitting this 30% without fail. You know what I'm saying? I'm hitting this 30% without fail. It's 30% easy, right? Then adjust your target to 50%, right? Adjust your target to 50%, and then when it get to like 40%, lock in 30%. You know what I'm saying? And then if you start noticing, hey, I'm hitting this 50% without fail. I'm locking in at 30%. I'm never getting stopped out, or I'm rarely getting stopped out at the 30%, right? Then push your target up to, you know what I'm saying, 60% or 75%. And then when you get to that, when you get to 50%, lock in 30. You know what I'm saying? And then let it keep going. And that way, you know what I'm saying, instead of taking the all or nothing at the higher percentages, you know what I'm saying, you still saving something, but you gradually moving up to see which targets you can hit, you know what I'm saying, over a period of time. That's just my little piece of advice. That's what's up. No need to be greedy on any day. Pew, I'm gone. Robinson, I'm watching for a retirement setup. That thing still running. They finna run this thing through London close. It's 10 minutes. London close. London power hour come up in what, 10 minutes? They finna run this thing through the London close. Charlie. We this is that void on the spot. We hitting that void on the spot. Let's see how it look on the ES. ES daily. I already got it marked out. It's a fair value. Huh. I wonder why I didn't mark that fair value gap. Oh, because it was outside the. Hey, what happened? Okay. It was outside the daily. So it's a fair value gap that we just reached the top of. And there's a full void on the SPY right around here somewhere. But it's just, we just got through the top of the fair value gap on the daily on the ES. And I didn't have it marked out because it was, I don't know why I didn't, because I got this one marked out. So why didn't I have this marked out? I just missed that. I ain't gonna hold you. I just missed that fair value gap right here. It's clear as day too, because I got this fair value gap marked out. I got this breaker marked out. I just marked that volume imbalance. I had that hourly fair value gap marked out. I just didn't mark that daily fair value gap right there. I just didn't see it. That one slipped past me. That's live. That's live. Okay, on the 4-hour time frame, we're coming up on a 4-hour fair value gap right before this daily volume imbalance. We got a 4-hour fair value gap that we're approaching in hot pursuit of. This thing running today. Looking like we're trying to cool off for just a second. Trying to cool off for just a second. Oh. Oh. Okay. We got a 15-minute fair value gap. Right. Okay. So see, this right here is probably about to make me adjust what I did. And the reason why I say it's probably about to make me adjust what I did, because okay, we got an hourly order block that we blast through, and it's right at the top of the range, of the DR range. And there's a 15-minute fair value gap. Right. So now coming back down, this order block can potentially act as support, because we blew through it. So it can act as support, because that order block on the hourly, since we blew through it, now that order block is now a breaker. Remember when I had it marked as a breaker before? Now it's actually a breaker now, because we went up, broke this low, traded back through it. Now it's actually a breaker. When I had it marked as a breaker before, see, I knew it was going to be a breaker. That's why I marked it as a breaker before. Okay, so now, all right, so now it's a breaker. So now we got a breaker at the top of the range, and at the top of the range, we got a 15-minute fair value gap inside that breaker. So now looking at the equilibrium of the IDR range, equilibrium is way down here at the breaking market structure, around 38.8350. That's right around where I had the mark to get in last time. So the entry was like right around here, around equilibrium, but now we're about to come back down, and we got a higher time frame PD array at the top of the range. We got a higher time frame PD array got a breaker at the top of the range, and got a 15-minute fair value gap inside that breaker. And we got an order block at the 5-minute order block at the bottom of the breaker. So, all right. So we're going to go, what's this right here? 38.87. 38.87. What time is it? 11:55. 38.87 plus 38.95. Okay, so 38.95 is up there. All right, so I can actually go off the top of. I can actually go off this, right? What's this? I like even numbers. 38.93.75. The bottom of the gap is 38.93. So I'm gonna go with 38.93. Oh, wait a minute. Ain't this the same thing that I already got? What do I have already? $38.93. Yeah, that's what I got already. Yeah, I got $38.93.75. Okay, so what did I say? I said $38.93. Okay, $38.93, and then all right, $38.93. So $38.93, and then yeah, so that's what I had already. That's what I had already. What am I tripping on? Why was I thinking I had to move anything? Oh, because I was looking at 38.83, and it was 38.93 that I had. Okay. All right, so yeah, I ain't got to move nothing. Yeah, I ain't got to move nothing. I did move to 38. I moved it to, what's the name? Yeah. I ain't have to move nothing. I'm tripping. Man, it don't like it's slowing down. That thing pulled back to that fair value gap, and it's pushing again. Said, forget your retracement, punk. We gonna keep running all the way through the London close, punk. We took out 3,900 with some aggression. I got in both yesterday at the lows. I got Apple until 6 January in the spot. I have until Friday playing back to highs. Okay, that's what's up. That's what's up. What's your exit plan on Apple? That's what's up. So you got, wait a minute. You said Friday playing back to highs? That's a short time frame. Playing back to what highs? Because Friday, that Friday, playing back to what highs? What highs you playing back to on that right there? So you got in around here somewhere. And what high are you playing it back to? What's all my thing? You got in around here somewhere. What high you playing? That makes sense to lock in certain percentages. The way they push today looks like Santa Claus is coming to town. Why you saying something? You can't be saying nothing that loud. The Grinch gonna steal Christmas, man. Can't be saying that out loud. Can't be saying that out loud. Yes, my thoughts exactly. Lucky in that profit. Yes. But back to what I was saying. Friday. Okay, so you got something for Friday, and you said, let me see. Got both yesterday at the lows. I got Apple to 6 January. Okay. And the SPY, I have until Friday, playing back to the highs. So you playing to Friday. Friday, you ain't got a lot of time, right? Today is running, right? We got GDP tomorrow. And you got it to Friday. Me with the way it's running now. Hey, it won't live to see tomorrow. If it was me and I got it to Friday, it won't live to see tomorrow. Because with them weeklies, one false move. Now, mind you now, you know what I'm saying? If it take off tomorrow, it'll be beautiful. But if it don't take off tomorrow and it's a weekly, whoo, I'd have had weeklies go from 150% up at the close of business, and then we tanked into London and I opened up down 20% because it tanked in London, and I was up 150% the day before, and it tanked in London, and I opened up the New York down 20%. Call them weekly, man. The premium on them weeklies move so fast. Hey, man, it's at the it's 11:02. Y'all got me working overtime. Thank you. Yes, my thoughts. Yeah, I saw that already. Y'all got me working overtime. Hey, man, I'm about to go ahead and call it. I appreciate y'all just sitting here watching me watch the candles and giving me an opportunity to talk to somebody. I don't know if this gonna play out, cause we running so far. This so far behind. We up here somewhere. This is that little pullback that it made right here. Then we took off again. This thing so far behind. Cause these 5 minutes. Let me see. Right now, let me change it to 15-minute candles. So right now we're on the 11:15 candle, which will be the 11 o'clock candle over here. This will be the 11 o'clock candle over here. So we still on the 10:45 candle, saying that we got 6 minutes and 55 seconds left on the 10:45 candle. And we already on the next candle over here, and we almost 4 minutes. We 3.5 minutes into the next candle over here. So that's a 10-minute difference. The 6.5 plus 3.5, that's 10 minutes. This thing 10 minutes behind. 10 minutes behind. Anyway, y'all, let's say I'm too scared to play that short. I'm not ready, but I love watching. Yeah. Them weeklies will put a hole in your head. You got to be spot on with that direction with them weeklies. Because if it go against you for one day, The next day, you need that thing to be so astronomical to pull you out that hole. It's ridiculous. Them weeklies ain't no joke. Somebody called the Grinch. Here I go. Oh no, I ain't crazy. I been to profit, just got a runner looking for 30%. Remember, I got 100 so far. Oh, I ain't know you got 100. You never said that. You just said it was running. You said, oh man, you got 100%. Oh yeah. Man, let that runner run, man. You already took profit on 100. Let that runner go, man. Leave that thing on there. Leave that thing on there till Friday. Lock in, put it at just above break even on that runner. Put it at just, well, if you got 100%, if you got 100% already and it's still going, lock in like 30% on that runner and just let it go to Friday. You know what I'm saying? Don't let it go all the way back and just start going negative, because that's going to eat into what you already took. Lock in like 30% on that runner and just let it keep running to Friday, see where it go. Got left on DR, wanted it to come back to the lower fair value gap, never got there. Yep, never came back. My Apple, I scaled out some, got runners as well, anticipating if we're going to get that Santa rally or go back down. Yeah, scaled out some. That makes sense. Took a little piece off. Can't never go broke taking profit. All right, Grinch. Hey, man, I'm finna call it. Go get me something to eat. I appreciate y'all just sitting here for 2 hours, watching these candles, you know what I'm saying? Talking through what we like to see. This is trading. Ain't nothing exciting about it. Ain't nothing sexy about it. You know what I'm saying? You look at the price action. You know what I'm saying? You make a call. You wait to get picked up. If you get picked up, you see how it play out. If you don't get picked up, you live to trade another day. This is trading. Y'all have a good day, man. Enjoy the rest of your day. I'll see y'all tonight at 6:30 for the price action recap. Gone.